Part of the goal is to avoid a recession, but are we already there? For more on the U.S. economy, let's bring in William Lee. He's the chief economist at the Milken Institute. William, great to see you as always. First, your reaction to this Fed move. The size was expected, and there was talk it actually could have been more.
Well, actually, Chair Powell has told us that if inflation becomes more and more disappointing, we're going to do more. And at this meeting, they said 75 basis points is the appropriate size, given where inflation is and given where the economic growth is. Now, insofar as your question about recession is concerned, everyone talks about 2 quarters of negative growth being the technical definition of a recession. Well, actually, it's not that. It's much more involved, including what's happening in the labor market. And Chair Powell is quite correct to point out we have a very strong labor market right now. But in my day, when I was at the Fed, we talked about growth recessions. That is, growth is so slow, it's bordering on zero. And at that level, we don't have a lot of job creation. And that's where a lot of discomfort takes place. And that's exactly the situation we have right now.
So explain the impact we'll see of this new rate hike, and have the previous ones accomplished what they were meant to do?
No, in fact, there's a lot of tightening yet in the pipeline to be felt. Chair Powell emphasized that there is a lag between the time they actually increase rates and the time the economy really feels it. We're already feeling the bite of these higher rates that they've done in the past in the real estate market and in the auto market, the auto lending market. Rates have gone up, the real estate market sales have collapsed. And I think it is starting to take hold, especially cooling down these red hot sectors that are feeding the core inflation. And Chair Powell has emphasized it's core inflation apart from food and energy, rents, services, the price of auto repairs, that kind of stuff. That is where we are worried that inflation will take hold and start to really be difficult to get rid of.
We know that every single word of the Fed statements are always examined. Did anything particular stand out to you this time around when it comes to what they're saying about the health of the U.S. economy at this moment?
They were very careful not to make very many changes in the statement. The most notable thing they put in this time is the very first sentence: the economy has weakened. And that's a good sign that says their policies are working. And now the question is, how much longer and how much more do they have to tighten? And that's something that everyone is waiting to see.
We know that the next Fed meeting is scheduled in mid to late September. What are the chances of an intra-meeting rate hike in August? What will we see in the next month or two?
It would have to be a nuclear disaster of some sort, or the equivalent of the nuclear disaster for the Fed to do something between meetings. It is a longer period. We're going to see 2 pieces of data on prices and inflation. We're going to see 2 employment numbers. We'll have a Jackson Hole meeting where the Fed will gather to discuss policy issues. There's a lot of opportunity for them to give us more hints as to how they'll be changing policy, but it's unlikely they'll do something in between.
We're almost out of time, but I got to ask you quickly, what kind of impact could we see this move have on the global economy? Will we see any ripple effects?
Absolutely. The strong dollar will have ripple effects on emerging markets, making their lives much more difficult. But it's the Russian-Ukraine war and the cutoff of food supplies that's really going to hurt them.
All right, William Lee, thanks for breaking that down for us. Always great to see you. Thank you for joining us.
Thanks for having me.
The U.S.